Well, the Dow's weak. Russell 2000 a little weaker. S&P 500 still at record levels, but about flat. That's the scorecard on Wall Street. But winners stay late for earnings. Welcome to Closing Bell Overtime. I'm John Fort with Morgan Brennan.
Well, the communication services, energy, and tech sectors fueling what we did see in gains today. The Nasdaq 100 also hitting record highs, but investors are now set for a wave of earnings. Tesla, IBM, ServiceNow, CSX, Las Vegas Sands. Just some of the big names set to report results in just moments. Instant analysis of all the numbers that's coming up.
Yeah, and while we wait for those earnings to come out, let's bring in our market panel. Joining us now, Barbara Doran from BD8 Capital Partners and CNBC senior markets commentator Mike Santoli. Barbara, we're now maybe looking for individual narratives. I mean, even if the market can go higher, and S&P maybe a little higher today, do you expect it to go a lot higher? What are the stories that investors really can believe in to drive things forward for them?
John, this is a tough moment in the market because what you saw today, I mean, we've seen parabolic moves since the fourth quarter and a little bit of backing and filling as we started the new year. But of course, it's just taken off and been led by the same leadership as last year, the mega cap tech. But today, just watching all the stocks make new highs, I mean, I have to admit, I trimmed a little bit of my beloved names, excuse me, Palo Alto, NVIDIA, Microsoft, because I said this for the short run, I think we've peaked out a little bit here. So I think there's going to be a little bit of backing and filling. You don't sell the names, you trim a bit, but this is still going to be the play. I mean, my view is the Fed is done hiking, but is not going to cut rates until sometime later this year, given the economic news, whether it's retail sales, jobs, wages, is just too strong. Plus, housing could start to, you start to see an increase with mortgage rates coming down, in housing activity. And of course, that has a big ripple effect. So that could be more growth, meaning the Fed does not need to cut rates anytime soon. And so it's really just a question of, inflation coming down, which looks, I don't think the inflation issue is structural. I think Powell a few months ago had mentioned when in answer to a question, are wages the reason we're having inflation? He said, no, it's really this continual rebalancing of the supply demand issues we had because of COVID. So I think you're going to see a good PCE number, the Fed's preferred measure of inflation, this Friday. And I think it's going to be positive for the market.
Yeah, we're going to be looking out for that, for sure.
Yes.
Mike, tell me now, energy was the best performing sector today. It hasn't been performing well lately overall. And, of course, we've got bank earnings that have been rolling out, and financials were also in the green today. What are you seeing overall? What's the mood?
I would read that mostly in terms of energy as just a little bit of laggards getting a little bit of a bid after this pretty mature rally that we've had in everything else. I'm not sure there's much of a macro read-through on that, although natural gas prices were up today. So there's some firming on that front. Financials have been okay this week. Once we cleared through the meat of bank earnings season, it kind of survived it, even though they didn't trade all that cleanly off of those numbers. So I'm not making too much of the sector action today, aside from this big burst higher in tech that then mostly backslid once we got an uptick in Treasury yields after that 5-year note auction at 1 p.m. So we've had a little bit of a rip here in the leading stocks, and there's still some rate sensitivity below the surface.
Barbara, I do wonder how many legs this AI story has for how many different stocks. Clearly, we've seen NVIDIA's got it. I know you said you're trimming. We've seen Supermicro. They pre-announced last week. They got a big pop. But now we wonder, some software names, something old, something new, IBM and ServiceNow, both going to report today. How dramatic do the results have to be in order to make investors believe in their individual AI stories?
Well, it is a good question, John. I don't think the results right now have to be that dramatic because we're still very early stages, like IBM, for instance. It's really a question of they've got the technology and the software combined. At this early stage, a lot of people need help, with the implementing the tools of AI. So their consulting business, should be helped. And it's a question of what they see for next year. And of course, consulting's lower margin than their software. And ServiceNow has so many different, they have a platform, they're expanding their services. They are incorporating AI into all their different offerings. But the first time they had a full quarter of doing that was the fourth quarter. So again, very early stage. So it's really going to be interesting, the commentary that they are seeing from their customers, how quickly the adoption is going to happen. And that's going to be important because obviously IBM is up over 20% in the last 12 months, it's near its highs of 10 years ago. And ServiceNow has been ripping as well. So it's really about the speed of adoption. And I think, for instance, that's why I've seen NVIDIA go bonkers, because their rate of growth is real and sustainable beyond the next few quarters. And it's getting rewarded for that.